Hello, my name is Alexander Hudgens, and today we'll be discussing our investment project and looking at the investment portfolio we got to use and strategize for ourselves, personalize through StockTrack. So, to start off with the rules, we start with $1 million to invest in with a maximum of no more than 20 trades. And this includes investing in different financial instruments, including stocks, bonds, options, and cryptocurrencies. Oh, pardon me, as well as futures. And we can borrow an additional $1 million at 8% interest rate. um, we could short if we would like. Um, and then, yeah, there's a 10% penalty if we don't invest. What is not invested, should I say. And we can't invest in mutual funds or ETFs. And we can't invest more than 10% of our value in one single stock, bond, option, crypto, etc., etc. If we do more than 20 trades, oh, we will be in trouble, we'll be locked out, and the project ends. Um, yeah, and we're trying to beat the S&P 500. I definitely did not, unfortunately. It was a little sad. Okay, so here we are looking at um we're looking at alrighty, so we're looking at my portfolio here, and on the left hand side you can tell by the color coded dates, the unique dates, that these are the days I invested um for my portfolio. And so I started off on October 3rd, October 4th, and October 18th. Um, and to find my total TWR, you take the product of column D. Oh, wait, one second, actually. Oh, yeah, oops. Let me back up. So, yes, to find the TWR for the 30-day return, what we do is you're going to take 1 plus Q1 to the power of 1/3 minus 1. And that gives us me a very bad negative percentage of negative 56.29%. So, yeah, a very horrible return my portfolio got me. Not the worst, though, believe it or not, according to my ranking or class ranking. But as far as the percentage for the 30-day return regarding DWR, you essentially take the same formula you applied above. You take, 1 plus Q1 to the power of 1/3 minus 1. And that gives us 39.12%, which is yikes. As far as getting that, we had to use GoalSeek, which, you go down to data and you go to the what if analysis and you click GoalSeek, and you want to set the sell to the computed ending value, which mine was $247,000. Oh my gosh, that's so sad, you know? Like, thankfully, over $250,000, but still. And you're gonna do the changing cell of Q17, which is the daily interest rate, internal return rate, I mean. Which, yeah, it's 1.107%. Beautiful. Okay, so on to the next slide. We're looking at my portfolio standard deviation. And so, what you do to find the daily standard deviation is you take column C, which is daily returns, and you multiply it by the square root of 30. Oh, wait, no. That's what you do for standard deviation. For monthly returns, you take the daily standard deviation, which is 2.51%, and we multiply that by the square root of 30. And that gets us 13.74%. I have put a photo over the example graph you have given us, Professor, and the purple line is the S&P 500, and the hot pink line is mine. And as you can tell, there were moments, at least kind of near the end, where I was close to maybe catching up, but then there's a drastic difference of my unfortunate losses. Yes. Okay, let's see. So this is when I thankfully, you've given us a template. So this is looking at us trying to find TWR and DWR of the S&P 500 for the dates of our project, which is from we were allowed to start trading September 2nd all the way till December 1st. So given that, for the total TWR, you take the product of column D, and you subtract that from 1, and then you get to the monthly TWR, which is 3.05%, which is this, also the monthly DWR. And you're going to take the total TWR and square root that by 30 divided by the number of project days, which is 87. And that's how I think that's how we get monthly DWR. Pardon me. And so for standard deviation, for daily standard deviation, you're going to use the formula in Excel, and you're going to take the standard deviation of the daily return rate, and we get 0.73%. And for the monthly standard deviation, to get that through Excel, you'll take the daily standard deviation, which is 0.73%, and you'll multiply that by the square root of 30, which gives us 3.98%. And so here we have a screenshot of what I have invested in on StockTrack. As you can see, I've invested in Palantir, CME Group, NVIDIA, Mercado Libre, as some options. I also did Tesla, but it's cut off at least on the bottom. And some stocks, I did Shopify, I did, one second, advanced micro devices, which, I chose to invest in AMD because the stock is volatile. So I was hoping it would provide me with lots of gains. I can't really tell. I guess if I really looked at the data, I could really see which were the main factors, which was like, the highest weight that brought my stock down. And yeah, my other stock I invested in was Shopify, and yeah, they experience rapid change, and they have, their experience market volatility. I did Bitcoin and Ethereum as my cryptos. As far as bonds, I only invested in one. I did Microsoft bonds. And for futures, I invested in crude oil. Regarding options, yeah, like I mentioned before, all those options. But this was an amazing project, super fun. Now I know I can always utilize StockTrack to practice some more before I play with my own real money. Um, or, you know, maybe I can play penny stocks. Lol. I'm kidding. But no, yeah, thank you for this fabulous semester, Professor. And I hope you have some very happy holidays. And please let me know if you have any questions regarding my material or project.